Hi, I'm Beck Mackey. Land tax, it's a killer when it comes to investment properties. Today we're going to have a look at an example for a small business owner who has decided that they need to set up a trust to own their investment property to protect that from their business and to keep it totally separate. So this particular small business owner is looking at buying an investment property with a land value of $600,000 in Victoria. They'll be paying land tax of $2,983. Now, fast forward about a year or two and they've decided that they want to buy a second property. They're looking at one in Victoria again. So now their land tax bill with two properties in that trust has jumped to $8,788, which is a pretty substantial amount of money. Now, if they had have come to us first before buying that second property, we would have advised or at least discussed with them the potential to set up a second trust to save some of that land tax. So if they had set up a second trust for their second investment property, say it's again $600,000 worth of land value, they would actually save themselves $2,822 in land tax, which is a pretty significant savings. The other thing they could have done to save some land tax is consider purchasing the second property in a different state, because even though you might buy it in the same trust, you do have the land tax thresholds of each state. So it's just another example, I think, of when it's really important to get advice before you make decisions on how you're going to structure the ownership of your next investment property purchase. Thanks, have a great day.